Bro, listen, Phase 1 of the India-US trade deal looks simple on paper, but one hidden clause flips the entire game. Nobody is talking about it. Therefore you might be way ahead of other retail investors right now. Stay with me, because what this clause touches first is not what you think. But here's where it gets crazy. So Phase 1 removes friction for a few sectors. Not huge yet, but powerful for momentum. IT gets smoother access. Pharma gets fewer hurdles. Textile exporters get faster clearance. Let me break it down in 5 seconds. This phase removes small barriers but creates big speed. Therefore execution gets easier for Indian companies. But the surprise sits in one sector nobody expects. You'll see it in a second. Yes, the twist hits defense. Phase 1 quietly pushes joint production. Not big announcements yet, but a shift in direction. Therefore Indian defense companies might see early orders. Small ones first, but bigger ones in Phase 2. This isn't hype. US wants faster supply lines. India offers speed but also lower cost. Perfect match. Therefore defense stocks might react earlier than the headlines. But there's a risk most investors ignore. Bro, this touches your portfolio directly. IT might get smoother contracts. Pharma might get shorter approval cycles. Defense might get early orders. But smaller Indian manufacturers face heat. Because cheaper US supplies hit the market faster. Therefore pick sectors with tailwind but avoid ones facing squeeze. Stay with the trend. Watch FII flows. Watch export companies. But stay alert for price wars. Because Phase 2 changes everything. So Phase 1 starts small but pushes momentum. The defense twist sets the tone. Exports breathe easier. Local manufacturers feel pressure. Therefore this is not a casual deal. This is a slow burn. But Phase 2 brings tariff cuts, tech transfer, plus something even bigger. You'll see how this hits Nifty in the next video. Don't miss it. Because Phase 2 flips the entire power balance.